Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the Hurt Locker himself, and you've got Big L Lanny, the Dividend Diplomats. And I know we cannot wait to talk to you about the beloved stock, one of Bert's favorites. Bert, take it.
One of your favorites too, Lanny. But before we start jumping in, smash that subscribe button. Give us that thumbs up. We cannot wait to talk to you about this dividend stock and some of the major news that was just released. Guess what, everybody? We are in the heart of earnings season. It seems like every company, big and small, is releasing their earnings updates and sharing their quarterly results. So that you know what that means. You know who just updated their results. One of the companies that we are keeping our eye on because we want to know what's happening with that dividend. So today we are going to talk to you about AT&T and some of the fantastic news that was disclosed in their earnings release.
Guys, this is huge news. Earnings are coming out hot and heavy to start off the first quarter of 2021. And you know that we were hawking AT&T, ticker symbol T, in their first quarter earnings release to really see if it's still a stock to buy right now or to keep on your watch list, as well as if you're a stockholder of AT&T, if you're going to continue to hold that dividend stock.
Yep, exactly, Lanny. So we can't wait to start diving in and talking about some of the news because there's a lot of great news. And guess what? The stock price reacted accordingly because AT&T is now trading healthily over $30 per share. Seems like a far cry since we recorded that video asking if AT&T was an undervalued stock at 30, Lanny, right?
Exactly. I mean, my gosh, the number of comments, tweets, emails that we got from all the viewers and followers saying, hey, have you noticed AT&T stock price? Because yes, that stock price has finally jumped, at the close of business on April 23rd at $31.40.
Mm-hmm. Yeah, so what was having everybody causing this buying spree and this price increase? Let me just rip some highlights from you. And the bullets from their earnings release. Revenues, almost $44 billion, up 2.7%. EPS, diluted 1.04 compared to 63 cents a year ago. Adjusted EPS, whatever they do to make that work, is up 2.4%. Here's the big one though, because to me, this is what's going to flow through to your dividend potentially. Cash flow from operations up 12%, and free cash flow was up 51%, ending at 5.9 billion. So yeah, Lanny's face says it all. They took their mic and just dropped that right there and said, I'm back.
I'm better than ever. AT&T, are they back? I mean, again, if you do the math, that payout ratio right now, we'll get into the metric, is just over 60%. And if you think about it, revenue's up 2+%. Earnings per share on an adjusted basis, which I like that they did that, up over 2%. Bert, what is AT&T's historical dividend growth rate?
Just under 2%. Boom.
Is this a sign, baby?
It is. But what's even better is you peel back the earnings release, you start scrolling down in there. There's actually a very detailed release. There were two big things that really jumped out to me. And there were two units that really stole the cake here for AT&T, which is right because this is, oh, you have yours too, Lanny? Yeah. Cheers right there. Anyway, what I was saying was they have talked about how they are moving into wireless, they're moving into internet, and they want to become a major player in the streaming wars. So guess what happened? Their mobile revenues jumped up 9.4%, and that operating income from that unit was 3.7%. And they added $3.6 million customers. I mean, I added AT&T in the fourth quarter when we switched our family plan. We left Verizon and went to AT&T. They have been aggressive getting new customers, and the results are starting to pay off here.
Results are paying off. HBO Max is starting to pay off even more, gaining millions of new subscribers, over 44 million domestic users now in the United States, and they're pushing close to 70 million users globally for HBO Max.
Yeah, they are working towards that targeted subscriber growth that they talked about a few months ago, and we'll share what their projections were here in a picture as we talked about it in our last video. But that is fantastic news. Two of the main units are showing very strong results here, and that's what you want to see as an AT&T investor. They're moving one way. The results in those units are absolutely crushing it.
Now, I love, Bert, that, you were able to do also a deep dive, and, AT&T actually shared their 2021 continued outlook for the remainder of the year, a few points here, they're expecting EPS to be stable, comparable to 2020, but they already beat on a first quarter adjusted basis. Is this called a under promise and maybe an over deliver to the market?
Yeah, they're setting the bar very low off the ground here for them to jump right over, but I love it.
Yeah, revenue growth, they're only expecting a 1%, growth on a comparative basis. But then at the same point, again, I'm gonna have to say already up, multiple percent compared to prior periods. So it's, very interesting what they're doing on their outlook. And again, in business, a lot of the time you do want to, I hate to say it, but you do want to under promise so that you can over deliver on results. But at least that it's going to be comparable more than likely to 2020, but hopefully not comparable with a no dividend increase like we saw in 2020.
Yeah, and the last piece of nugget in their outlook update was their free cash flow projections. They're projecting free cash flow over 26 billion, and their adjusted dividend payout ratio with this free cash flow of in the high 50% range. So as you said, Lanny, there's room to grow this dividend if they want to and if they feel comfortable, because we all know they haven't increased. They were supposed to in December. We're still waiting. And maybe, just maybe, they're going to keep that aristocrat status by announcing something in the next few quarters.
Now, guys, and all the viewers out there, Bert and I, we want to, look at this through the Dividend Diplomat stock screener before we actually say, is this a stock to buy or to add to your watch list? Again, focused on 3 metrics that we'll hammer through with the bonus metric. First, it's going to be that price to earnings ratio, really looking at that closed share price on that forward earnings projection. Then we could dive into that dividend payout ratio, based on that earnings and current dividend. And then we look at the dividend growth history and growth rate. And then lastly, if they meet the metrics, we'd love to look at that. Bert, what is AT&T looking like right now after this earnings release?
Yeah, so let's rip through the metrics here. At the time we're recording this video, their stock price is $31.40. Forward EPS is $3.14. A PE ratio. No, this isn't rounded. I'm not estimating this, everybody. PE ratio of 10 on the dot right there. Market's over 40x. Clearly signs of undervaluation here for AT&T. Although that has increased because their stock price is going up compared to some of our previous videos.
Right. And I know the S&P, I know a lot of comments have come in. Why don't you use the S&P forward PE ratio? Well, it's still well over 20. So again, AT&T at just 10.
Yep, and their dividends per share, $2.08. Hopefully one day it'll be more, but for now it's 208. Divide that by the forward EPS, that gives you a payout ratio of 66% there. So a hair above our stock screener metric, but it's okay. After reading these results, I'm feeling confident about their dividend. I'm not worried about the safety of their dividend, because that's really the point of this metric. We want to make sure your dividend is safe and not brushing up against 100% that might indicate that there is a cut coming in the future.
And Bert, diving into the dividend growth, we know that they're an aristocrat with 25 plus years. And we said it earlier, what is that 5-year dividend growth rate on average?
A blistering 1.83%. So, hey, that's what AT&T is, what it is, a high yielding company with a low growth rate. And Lanny, throw us that bonus metric. What is the dividend?
That bonus metric at the current price of $31.40 with the dividend of $2.08 right now yields 6.62%. Again, essentially 5 times what the S&P 500 is yielding. You can't really argue about yield right now. It's very nice. It's almost like a high income stock right now.
Exactly. So here it is, just to summarize through them quickly. PE of 10, payout of 66. They're an aristocrat. 5-year growth rate of 1.83% and a dividend yield of 6.6%. Those are metrics that are still showing signs of undervaluation, even at $31.40 for AT&T. And I got to be honest with you, I'm really liking this news here with AT&T. Am I running to buy today? Not necessarily, but you bet now if there is a pullback for AT&T, I will add them to my watch list and I may run up and start buying because I'm liking some of the news in this earnings release. Andy, what are your thoughts about AT&T right here?
My thoughts are with AT&T is this. The one thing I didn't like seeing was that long-term debt actually went up more than likely because of the 5G. So we got to really look at that balance sheet still, but again, they do have, they're sitting on, over 11 billion in cash and cash equivalents, which is nice to see. Really the current assets, current liabilities kind of increased, hand in hand from 12/31. So really keep an eye on the balance sheet. You know, I was really hoping that debt, you know, was kind of going to be stable, but obviously with the 5G battle with Verizon on the 5G king at this point, you knew that some sort of debt was going to be taken on. But again, I think once this DirecTV spinoff to that new entity with the private equity group, I think this hopefully will clean up a little bit. So I'm looking forward to that being completed. You know, not, you know, it's a good dividend stock. Keep it on the watch list. If you want to buy AT&T stock because you don't have it, it's not a bad, it's a good price.
Yeah.
I'm not going to say it's not. All the metrics are solid, a 6.6% yield. Dividend has no chance right now, I don't believe, for at least the next 24 to 48 months of being cut whatsoever. If anything, you know, we're more concerned with the dividend growth, which could happen very well with 6
Think
months.
about this. Their first quarter results were knocked out of the park better than expected. If they can keep this up in the second quarter, we know that to keep their aristocrat status, they got to announce something in the third quarter so they can increase that payout that's going to come our way in November to have that year-over-year dividend growth. So I'm not saying projecting there is going to be a dividend increase, but if we have one more quarter like this, we may just get that dividend increase and T may keep that aristocrat status by the end of the year.
Right. So again, great dividend stock. I know Bert's excited. Everything was really positive about this. I mean, they're trying to clean up what they do and try to be best in class at what they're involved in, you know, streaming, internet, wireless communication.
And you got to respect that. So everyone, let us know what you think of AT&T and these results. Are you feeling as hyped up about AT&T as we are right now? You can tell we're excited. We like these results. Let us know what you think. Are you concerned about the increasing debt in the balance sheet or not? And if you haven't, everybody, please subscribe to our channel here. Give us that thumbs up. We appreciate all your support as we race towards 10,000 subscribers.
Thank you guys for watching. This is Bert and Lanny from the Dividend Diplomats. Over and out.